Okay, here we go. We are going to be talking briefly about comparing the LLC versus the corporation, the S corporation, and we're talking about a single member LLC as they relate to tax purposes here in the United States. You need to make sure that you know how much taxes you owe in order to determine how much you are supposed to be paying or not. That is what this quote is saying right here by me, yours truly. Okay, let's go. So agenda is we're going to talk about the flow-through aspect, the liability aspect, as well as income tax and self-employment taxes. Again, flow-through, liability, if there's limited liability or not, the income tax and self-employment taxes as they relate to those two, either the LLC or the S corporation. I'm down there on the bottom, just FYI, if you want to know who I am or how to reach me, that is how you can reach me. So with regards to the flow-through aspect of it, both LLCs and S corporations flow through, which means that their net income goes onto the Schedule C, and they flow through to the personal tax return of the shareholder or the business owner. We're going to talk briefly about that as well pretty soon. Liability, there's limited liability, which means that if a plaintiff sues, that they will be able to only recover their damages from the entity itself, not from the owner's personal assets. Got it? There's limited liability. The liability of the owners is limited to whatever is inside of the corporation of the entity. That is both for the LLC and the S corporation. One thing to note is that there's something called piercing the corporate veil, where if the funds are commingled between the owner and the entity, then courts can pierce the corporate veil, which makes the personal assets and the owner personally liability for the corporation, for whatever the corporation would be liable for. That is what we call piercing the corporate veil. One other thing, last point on this slide, is insurance. Is that insurance, umbrella insurance or other types of insurance, are oftentimes used to cover any liability that might go above and beyond what the entity is liable for. Okay, here we go. Turn the page. Okay, here we go. Income tax purposes. So as far as income tax goes, both the S corporation and the LLC are obligated similarly for income tax. The net income of the corporation, the net income of the entity flows through to the personal taxes of the business owner. The rate is not going to depend upon the type of entity. The rate is going to depend upon the bracket that the owner is in. And it's also the net income of the entity is going to be subject to personal deductions. If they have whatever the net income is of the business, it's going to flow through to the 1040 of the individual, of the owner, and then the owner's personal deductions are also going to be on that 1040. So they're going to be working together. Now, with regards to self-employment tax, that is where the difference is going to be. S corporations have to pay their owner a reasonable salary. The IRS determines what a reasonable salary is. Oh no, excuse me. You have to determine what a reasonable salary is, and you have to be able to justify why you determined that. So whatever the reasonable salary is, that is what the self-employment tax is going to be paid on. It's not like an LLC where the self-employment tax is going to be paid on the entire net income, and self-employment tax is greater than 15%. It's about 7.65 times 2, so that's about 15 point something. 7.65 is going to be 15.3, I believe is what it is. So reasonable salary. That's, like I said, you're going to have to determine it and show some support for it. One thing that corporate owners of S corporations might try to do is pay themselves a very small salary. I'm going to give myself a $1 salary, but that's not going to fly because that's not a reasonable salary, right? Because then they would only have to pay the self-employment tax on that 1%. So keep that in mind. And lastly, an example, if you have $120,000 net income excluding the salary of the S corporation, right? Let's say you have $120,000 net income, and the owner took $50,000 out of it. For an LLC, it does not matter that he took $50,000 out of it for his own personal expenses. It does not matter. He's still going to be paying the self-employment tax on the entire amount, right? On the entire $120,000 net income. However, under an S corporation, he pays himself a salary of $50,000. The rest, the $70,000, stays with the company, and the self-employment tax is only going to be on that $50,000 salary. So, in summary, there is a significant tax difference between having an S corporation and an LLC. And when somebody opens up an LLC, they can either be taxed as a sole proprietor or an S corporation. So the default is that they were taxed as an S corporation because that's more beneficial to the tax authorities, not more beneficial to the taxpayer. So keep that in mind. You have to make an active election to be taxed as an S corporation. That's pretty much all I want to say with regards to this. S corporations have tax advantages. My contact information is down there below. Name, Michael Wander, email info@wandercpa.com. Really quickly, clients that I work with generally are small to medium-sized businesses and high net worth individuals, the business owners. And the services that I provide are tax, financial reporting, bookkeeping, and advisory. I've been a CPA for about 7 years, and I look forward to providing more content. If there's anything that you would like to hear about or learn about, please drop it in the notes below. Send me an email, get a hold of me somehow, and I look forward to being in touch. All right, have a great day. Bye-bye.